Today, I want to start this video by sharing the golden rules that shaped my trading. Before we talk about mindset, routines, or personal experiences, it is important to understand the foundation that holds everything together. At the end of the day, trading is simple. Not easy, but simple. The big gains come from the right opportunities, not from trying to trade every move on the chart. I'm not here to chase noise or jump into every candle. If a setup is not clear, I stay out. If the opportunity does not meet my criteria, I walk away. There is no pressure to trade, only the responsibility to protect my capital. Rule number 1, never add to a losing trade. If the market is moving against you, accept it. You're wrong, and that's okay. Close the trade, learn from it, and wait for the next clean setup. The moment you start saying it can't go lower or it can't go higher, you've already lost control. Look at Bitcoin, for example. Every time someone says it can't drop more, the market proves them wrong. That's how traders destroy accounts. Not by being wrong, but by refusing to admit it. Rule number 2, add only to winners. Most traders add to losers out of hope. Professionals add to winners out of structure. When you're right and the market confirms your bias, that's when you build size. But do it carefully. Add only after confirmation. Use your unrealized profit to fund the next entry. Add smaller each time and always know where you'll get out if it turns. Growing a winning position should never mean growing your risk. Rule number 3, take profits on your winners. Don't try to catch the exact top or bottom. Lock in gains, take partials, and let the rest ride only if the market keeps moving in your favor. Protecting profits is just as important as cutting losses. Rule number 4, trade with a clear mind. If you're tired, distracted, or trying to make up for a bad week, step away. A foggy mind turns smart traders into gamblers. If you had a loss this week, don't spend Friday night forcing trades. Accept it, write it down, and study it tomorrow when you're calm. And the golden rule, cut losses. Cut them fast, cut them clean. No trader ever blew up from small controlled losses. The ones who blow up are the ones who refuse to take them. So these rules did not appear out of nowhere. They came from years of mistakes, lessons, and personal experiences that shape the way I think and the way I trade. And to understand why I follow them with so much conviction, it is important to know the story behind them. The moments that taught me discipline long before I ever opened a chart. The weekend is more than a break from the charts. It is the moment when every trader resets the mind and recenters their focus. If you close the week with gains, protect that mental state. Stay balanced and keep your feet on the ground. If you ended with a loss, do not let it define you. Use that experience to come back stronger. In trading, results are not built on luck or wishful thinking. They are built on having rules, applying discipline, and controlling your impulses. And before I share the principles that help me become consistent, I want to explain where my discipline actually began. My past was not simple. My family faced many financial challenges, and structure was not something I grew up with. That only changed when I became part of my wife's family. Through them, especially my father-in-law, I learned the value of responsibility, education, and steady habits. Those teachings shaped the person I became and deeply influenced the way I trade today. Trading works the same way. No matter what market you operate in, having a clear set of rules and sticking to them is what keeps you safe. Without that structure, the market eventually exposes every weakness. And what use are rules if we ignore them a few times a year? A single emotional trade can undo weeks or even months of progress. You may have lived this moment before, holding a Bitcoin long during a weekend drop, hoping for a recovery, only to see your gains vanish in minutes. It leaves a mark. The impact goes beyond the financial loss. It also affects your confidence and mindset. You begin to question your process and your ability. That is why Fridays matter so much. Whether you close the week in profit or in loss, this is the time to stop, open your journal, and be honest. Did you follow your plan, or did emotions take the lead? The reality is that in trading, we answer only to ourselves. There's no boss to warn us when we break our own rules, and there's no one to rescue us when we go too far. Think about a regular job. If someone repeated the same costly mistake several times a year, they would be out the door. Yet many traders keep repeating the same behaviors, convincing themselves that the market will somehow forgive them. But it never does. The market responds to discipline, not wishful thinking. That is why personal accountability is so important. In the end, trading is not just a technical activity. It reflects your discipline, your habits, and your character. With time, I learned that the top priority each day is to protect your capital. Not to chase every move, not to hunt for huge gains, but to defend what you already earned. Oversized risk, weak setups, or adding to losing trades may feel exciting for a moment, but those impulses quietly destroy consistency. Many traders focus only on the numbers they hope to make, how much profit this week, how much they expect next month. Very few dedicate the same energy to understanding their losses. But losses are the greatest source of growth. Every bad trade contains a lesson if you're willing to study it. Your best rules are created from the mistakes you refuse to repeat. A quick look at any chart shows why this mindset is essential. A single oversized Bitcoin trade, taken without respect for risk, can wipe out months of careful progress. Not because the idea was terrible, but because the trader ignored their own boundaries. The reality is that trading is demanding. Close to 90% of traders fail, and it is rarely because they cannot spot good setups. Most fall because they take too many unnecessary losses, or because a single oversized loss wipes out their account. That is why having clear rules becomes the dividing line between long-term survival and failure. And let's face it, spending hours in front of the charts can create a sense of urgency. Every candle that moves makes you feel like you need to participate. You open social media and see traders posting entries non-stop, and suddenly you think you're missing out. But that feeling is nothing more than an illusion. You do not need dozens of trades every week to grow. You need a small number of high-quality setups, the ones that fit your plan and that you can execute with clarity. Even if you take just a few trades in the entire week, those few can build a solid career when managed with discipline. One of the most challenging skills in trading is doing nothing. Sitting patiently and waiting for the right moment sounds easy, but it takes real control. The urge to take any trade that looks active is strong. But why engage in setups that do not respect your rules? Why risk your capital on random trades driven by boredom instead of edge? Most traders have experienced this. You see someone posting a chart or announcing a new entry on social media, and suddenly you feel like you're missing out. You jump into a trade even though you know it has nothing to do with your plan. Maybe it's a quick Bitcoin scalp late on a Friday when liquidity is low and volatility is unpredictable. You take it just to feel involved, and the market ends up reminding you why discipline matters. With time, I learned that the most successful traders are not the ones who trade non-stop. They are the ones who wait patiently. I used to take twice as many trades as I do now. Today, I trade less, but my results improved. The reason is simple. I focus only on setups with real probability, the ones that match my system and have shown consistency 8 or 9 times out of 10. When I enter a position, I begin with small size. If the setup confirms, I build into it. If it fails, I exit quickly and move on. There is no benefit in holding a position that is clearly invalid. And there is never a justification for adding to a losing trade. That is how small errors turn into large setbacks. Every trader knows the feeling. Price moves slightly against you, and you tell yourself that it will come back. You add more, trying to justify your idea. Hours later, the loss is 5 times larger. The next day, the market opens even lower, and you freeze. That is how a single act of stubbornness can erase months of disciplined progress. Not because the market was unfair, but because ego took control. Markets do not ruin traders. Stubborn decisions do. Think about Bitcoin's move in 2021. It reached around 69,000, and many traders were certain it could not drop much. At 50,000, they called it a pullback. At 40,000, they increased their positions. By June 2022, when Bitcoin slipped under 20,000, Months or even years of gains had vanished. That was not manipulation or misfortune. No one forced those traders to hold all the way down. No one forced them to add during the decline. Small losses turn into disasters when pride replaces discipline. The market does not care about opinions. It only responds to risk management. That is why, as the years passed, I became more demanding with myself. My rules are not written on a board or pinned to a screen. They are part of how I think. I follow them automatically. Focus only on high-quality setups. Never add to a losing position. Know your exit before you even consider entering. When you spot a setup with a proven edge, the kind that wins most of the time, that is when you size up. Everything outside of that is just noise. And when the week comes to an end, whether you closed in profit or in loss, take a moment to reflect honestly. Did you respect your edge, or did you spend the week reacting to distractions and random movements? That simple question reveals a lot. Not just about this week's results, but about the trader you are becoming. With time, I understood that long-term success in trading does not come from chasing new tools or searching for hidden formulas. It comes from building real discipline day after day. Through mistakes, corrections, and growth, I shaped my own rules. They are straightforward, but they have kept me consistent through both strong markets and deep downturns. And that is why the way you end your week matters so much. So as you wrap up your week, take a breath. If you finished in profit, enjoy it. You earned it. If you finished in loss, don't carry it into next week. Use Saturday to study your trades, understand what worked and what didn't, and get better. Then spend Sunday recharging. Step away from the screen. Be with your family, your friends, your real life outside the charts. Because trading is not just about numbers or setups. It is about staying balanced enough to show up sharp when it matters most. Every Monday is a new chance, and how you spend this weekend will decide how ready you will be for it.